repo, 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 and another repo. Oh wait, and there's another repo back there. Hey, welcome to Flying Wheels and a dealer auction. I own a car dealership, and I like to say that my feet are planted on the ground. I get to see firsthand where the market is at. Are we doing well? Are we doing bad? Is the economy doing okay? Are people spending money? Are they not spending money? Are they buying high-end cars? Are they buying budget cars? Are there a lot of repos out there? Today's video, I'm gonna tell you what's going on in the market now, because it is constantly changing. Like, things have changed more in the past 3-4 years than I've ever seen in this entire industry. And I'm gonna give you some updates. And it is packed with information. So stay tuned. My name is Craig from Flying Wheels. Let's get going. So welcome to auction day, and also talk about the industry itself. There are a lot of changes in the car industry. Prices have changed. Some have gone up, some have gone down. What's hot in the market, what's not hot in the market. Do you own your car for too much? If you have a repossession, or if you're in over your head on your loans, what should you be doing? All of that is going to be in today's video. Now, if you're a car dealer living in a seasonal region like I do, I live in the Northeast, I buy seasonally. I say this all the time. So it is August now. I don't buy sports cars anymore. The sports car season is done. Like, Walmart doesn't start buying back to school stuff in September. They start buying and selling their back to school stuff in July and August, right? Same idea with cars. I live in a seasonal area. That Camaro, that Corvette, all the fun stuff that I've already showed you in this video briefly, I don't even want that anymore. It's useless, because in another month, less than 30 days, people are going to want to start getting rid of their toys. So if I have a convertible, if I have a rear-wheel drive car, if I have a motorcycle, if I have a boat, a jet ski, people are going to have to winterize those things and store them very, very soon. And it's already in their mind. They're going to start thinking, oh, the season's almost over. The season's almost over. I got to get rid of this stuff, or I'm going to store it and I'm going to have to winterize it. It's going to cost me money. So they're going to start putting it on the market. When that happens, the market gets flooded. So there's more supply than there is demand. I'm not going out buying boats in September, October, or am I? I am. Most people are not. Right now is August. I want to start thinking about when people are buying, what they're going to be buying. People are going to be buying trucks and SUVs in another month or two. In just a few weeks, kids are going back to college. So I'm already into my back to college cars. I've already sold them all, and I am in truck and SUV stocking season. So trucks and SUVs are going to be in high demand shortly, like another 60 days. So I start buying them now while the prices are still low. Then October, November, people again aren't going to want to store their motorcycles, their boats, their jet skis, their convertibles. I'll buy them all up at a discount, and I have the money to hold them. Now, a lot of people don't have the money to hold them. I'll sit on them, I'll put them aside, and then March and tax time, they all go up for sale for a premium, and I'm going to make all my money plus back. So I try to buy a season or two ahead. So as you can see behind me, we don't have a car shortage anymore. There's no car shortage. To be quite honest with you, whether we're in a recession or not in a recession, or however you feel politically or whatever, has nothing to do with what's in front of me. And to be quite honest with you, people aren't spending money like they were before. A lot of businesses were flooded with extra cash during COVID, and they had to spend those on expensive or heavy vehicles over 6,000 pounds or over 8,000 pounds, whatever it was. And they were spending money because the government was giving it to them. When they pumped money into the market, there was more money in the market. So like, if a G-Wagon was for sale and the government's giving me the money that I have to spend, I'll go buy the G-Wagon. When 10 people want to buy that same G-Wagon, the price on G-Wagons go up. That's what happens. Now, the government's not giving us money. And my business, to be personally, be honest with you guys, it isn't doing what it did in COVID in like 2021, 22. We are way down on our numbers, and it's specific to like staffing issues. I could buy as many cars as I want. I can't get them cleaned, fixed, and ready for sale fast enough. I don't have the manpower. And I've put staff, like I've put want ads out on Facebook and Craigslist and Indeed and Career Builder everywhere. I'm getting no responses. And now when I speak to the GM of the auction last week, I get so much information from him. He really tells me a lot of information about what's going on and what he sees. He's having staffing issues, and it's slow for him. So he's getting like day laborers to help him out. And he's found more people that want to work part-time, like Tuesday, Wednesday, Thursday, instead of full-time. So a lot of people today either want to work from home or think they can work from home, or they only want to work part-time. Where are they getting their money from? I have no idea. Or maybe they were just sick of everything and cut their expenses back. I'm really not sure. I'm having that same problem. So it's not that I can't get the vehicles. It's that I can't get the vehicles fixed, cleaned, and ready for sale fast enough. And a lot of dealers are like that. So what happens? You could potentially, as a consumer, end up with an inferior product when you're purchasing it. Like, I still have to cover my overhead, I still have to cover my expenses, so I still have to buy vehicles. So me or any other dealer is more likely to throw a car up for sale quicker to still keep up that turnover and they're not repaired as quickly. Or worse, like we hire whoever we can get. And a lot of people just like, we'll take what we can get, and then you're getting inferior work. So things might be getting missed. And that's not just in this industry, it's in contracting, it's everywhere. So like there are less people getting into general contracting, into construction, into carpentry, into plumbing, into electricians. Like there are less people getting into that industry, which is affecting everybody. So when there are less electricians to hire, to get bids from, you have to go with someone else that may be too busy because they're also understaffed. Those increased prices always are passed on to you. That's like economics 101. Same with us. I still have my overhead. I am not able to purchase and get as many cars available for sale. And for that, I still have to make the same amount of money to cover my expenses and pay increased labor costs, not to mention my insurance costs have gone up, my parts have gone up, my electricity has gone up, my everything has increased. All of that gets passed on to you. So if you ask me, are car prices falling? They're not. Car prices are not falling because they can't. We can't survive if I drop the prices on cars. I'm gonna get into that a little bit more in just a second. All right, what you will see as far as the eye can see on both directions are repos. This right here is CAC, Credit Acceptance Corp. Repos are going all the way up the hill, all the way down the hill. Now repossessions are way up. I've made videos about that. I'm not going to continue to keep making repo apocalypse videos. I despise doom and gloom videos. That's what gets the views, that's what gets the clicks, so I get why people do it, but I'm not Chicken Little and the sky isn't falling. The world isn't ending, and I despise all these YouTube videos that keep saying car market's dying, the world is ending, but what stinks is that's what gets the views. So that's why they have to keep making these like world is crashing thumbnails, because you're gonna click on them. The world isn't dying. The repossessions are way, way up. So let's talk about that. I've explained this many, many times, so I'm not gonna get deep into it. I have other videos about it. 2020, we go into COVID. Manufacturers are shut down. We get a chip shortage. 2021, we have a car shortage, used car shortage, new car shortage, prices skyrocket. Banks, just like they did in 2008, they were lending out these absurd prices on cars. It made no sense. I said it back then, I said it in 2008. There's no way a house can be worth this much money. It's happening right now in the housing market. There's no way it can be worth this much money. 21, 22, cars are like, the value of cars were absurd. And banks were lending out on those values, 110, 120, 130% of its actual value. They're lending out on it. Now, I say actual value. The actual value is already high because there's a supply shortage. So demand was high, supply was low, cars were up. Way up, and people were financing through the roof, and they know they're overpaying for cars, new and used, and that's just the way of the world. And I made videos saying, guys, things are gonna regulate, things are gonna change, and you're going to own your car for too much money. Well, guess what? Oh, it's like I have a crystal ball. Everybody owns their car for too much money now. If you got a car in 20, 21, 22, sorry to say, you paid too much. That was the way of the world. Don't buy a car if you didn't need one. If you needed one, sorry, you were in trouble. The people that took advantage of the situation were the people that owned cars pre-COVID and sold them during COVID. If you had toys, there was a huge inflation on toys. Hopefully you sold them all. I didn't. I still have some. I should have sold them all and taken advantage of boats, campers, all of it. Get rid of all of it. Sell it all because there's a premium on all of it. Now, the people that bought them, some of you, paid way, way too much. When you go to trade it in, car values have regulated again. I have cars that are worth way less than they were a year ago. Same car, 1 year newer, worth way less than they were a year or two ago. Now, this happens all the time. Someone just wanted to trade in their truck, whatever it was, I forget, and it happens weekly. Yesterday, somebody called me and they're like, hey, I want to buy your Nissan Titan. I'm like, oh, perfect. Do you take trade-ins? Yeah, absolutely take trade-ins. I have an XYZ. I'm like, oh, great. Do you have a loan on it? I do. Do you know how much you owe on it? Yeah, I owe a little too much on it. Okay. So now they go to trade in their car. They can't because let's just say their Toyota Camry is right now worth $10,000. But 2 years ago, they paid $22,000 because there was a premium on Camrys. There was market adjustments. Remember those market adjustments on new cars where we paid $10,000, $20,000, $30,000 on new cars? Well, they're not new anymore. So they're a used car, they're 3 years old, and the values have dropped regularly anyway. So they owe way, way too much money on their car. They can't trade it in. Like, I can't take that trade in. You owe too much money on it. So what are your options? You, number one, you pay it down yourself. So you throw a gigantic amount of cash at that loan, pay it down. That's number one. then now you owe it for its actual value. So either way, you lose. You lose all the cash up front, or you trade it in and you take a gigantic loss, and that gigantic loss has to come from somewhere, because as a dealer, I have to pay off that loan. So I am gonna recoup that money, that difference that I have to pay, the negative balance or the negative equity, I have to pay that towards your loan. So what do? I can roll that into your new car. So if you're buying a 17 Denali off me for 24 and you have $4,000 negative equity on your Camry, I might now have to sell that Denali for $28,000 and again overfinance you for $28,000 so I can take that extra $4,000 and pay off your loan. So now you're out of your Camry, but you own the Denali for $4,000 more than I'm selling it for. So it's kind of just you just keep going. You just keep rolling it over, and that is the second way to get out of it. Third, voluntary repossession, which is going to affect your credit negatively, like terribly negatively. Don't mess with your credit. I highly don't suggest not messing with your credit. And then your fourth is actually let it get repossessed. Stop making your payments, let it get repossessed. That is worst case scenario. Do not let your car get repossessed. It will show on your credit for 7 years. It shows that you gave up paying, which says a lot about your character. It doesn't matter if you're in a bad situation in life, it says a lot about you on your credit report. And that's how banks and lenders are gonna look at you. Oh, this guy's irresponsible. This person is irresponsible. They didn't pay that loan. Why would they pay for this loan? This week, a guy tried to finance a car, didn't tell me he had a repo. So I'm like, hey, it says you still have an open auto loan on your credit report. He's like, oh, no, that car was given back. So I'm like, given back? Given back to who? Oh, we gave it back to the bank. Like, you gave it back to the bank when? Last week. So I'm like, so it's a voluntary repossession is what it's called, and you gave it back to the bank. Yeah, last week. Well, it's still showing in your credit report as a loan, and eventually it's gonna show up as a repo. Why was it repossessed? I couldn't afford the payments. Okay, so how are you gonna afford these payments? Because you're buying a car that's the same price. How are you gonna, and interest rates are higher, which we'll talk about again in a little bit. How are you going to afford a new car? So there's like a lot of trickery going on. So dealers, and they know to look out for it. There's a lot of buyers are liars. He lied to me. He tried to get one over. Someone did get one over on me. I'm gonna have a whole video on buyers are liars and customer lied to me later on down the road. But dealers have to look out because there are people trying to get out of their loans and roll right into another car. My bank knew they had an open auto loan, and just deeper questioning, kind of vet the customers, how we figure things out like that. You're not gonna get it by on us. We know all the scams, all the tricks, but those are your options for repo. This was a long segment. I told you I wasn't gonna do it. Let's move on. We're gonna see what we bought and talk about increased interest rates and how it's affected the auto industry and you personally. Let's go into the auction. I had mentioned plan ahead, buying plow trucks in August. I had mentioned these earlier, but the first things to go that get repossessed are toys. So motorcycles, they're not necessary. Anything that's not necessary, the first things that get repossessed. We have a Harley, a Ninja, another Harley. Well, that just looks catastrophic. We have a side-by-side with some negative camber and flat tires. Look at this Ducati Monster. That is beautiful. Wow, 2021 from Service Credit Union. So Credit Union repossessed it. Look at this 2021. The decals are peeling off. That's kind of a bummer. That is a cool looking bike. Boats, campers, toys, motorcycles, second homes, Airbnbs. When Airbnb is starting to slow down, those are non-essentials for people. So those are the first things people stop paying for, and those are the first things that get repossessed or go to auction or go into foreclosure. And like I mentioned, I don't have a crystal ball. Like, my feet are on the ground floor. I kind of get to see how the market's going, how the economy's going. Are there more repos? Okay, if there are more repossessions, then now I know something's wrong. If there are more toys going up for repossession, that's a sign of what's to come. So the toys go up for repo before the daily drivers, the cars that get you to and from work and to and from the doctors and your kids to school. So when there's a lot of toys in the repo lane, that is not good. All right, next chapter of this video, I told you I had mentioned interest rates. Interest rates affect the values, okay? So if somebody, what's the first thing you go into a dealership, the first question they ask, what do you want to pay? What can you afford monthly? Let's figure out your payments. Doesn't matter what the price of the car is, which is a scam, by the way. Don't buy cars that way. Get the best price, then work out your payments. But car dealers will say, all right, what's your monthly payment? What can you afford? So you tell them the monthly payment, they can extend that 60, 72 months, whatever. Interest rates change, your price on your payments increase. So if you're buying a $30,000 car at a 4% interest interest rate, your payment's gonna be lower than if you buy a $30,000 car with a 9% interest rate. I think the national average is like 8%-ish right now, 7.5, something like that. So obviously your payment increases. You can still only afford a certain amount. So you either pay more or you can only afford what you can afford. You either buy that car or you don't. And when nobody can buy that car because now it's unaffordable, the price has to come down. So the interest rates will reflect how much you can afford on the vehicle, how much you can pay for a vehicle. Same with houses. If you can't afford the house because the interest rate is high, you're not gonna buy it, which isn't just you. There's a lot of people out there that can't afford the cost of houses due to inflation with the current interest rate. It's not possible. Price has to come down. Same with cars, and they are. You're starting to see that. So that is our auction video car market update for this month. I love updating you guys because, like I said, I feel like my feet are on the ground floor. I get to see what's going on in the market, what's going on in the industry. Are things good? Are they bad? Are they getting better? Are they getting worse? All of those things I kind of see, and I like to update you with all that information. If it was helpful, just thumbs ups are appreciated. Comments down below are read. And subscribe, because this video you watched is actually 2 parts. We're doing a full auction video to see what we bought, teaser, this same day outside of this video. So subscribe so you get to see part 2. Thanks for watching, everybody. I'll see you all later. Adios.